Ranjan, that makes me wonder whether we can judge the overall trajectory of Robinhood based on what we've seen from things like meme stocks earlier this year, or if things were normalized out somewhere else. I mean, how can we tell?
Great to be here, and I'm still trying to recover from that Amazon song. That was quite something. I think Robinhood's S-1, it shows us that as a business, it's the dream of any kind of Robinhood trader. It's got a ton of upside and a ton of risk. And as you just said, when so much of the revenue is concentrated in options and crypto and potentially meme stocks, there's a great deal of risk. But the numbers are hard to deny. And even as someone who's kind of watched the company very closely, I was even blown away. I mean, going from $278 million in 2019 to $1 billion almost in 2020 to on a run rate of $2.2 billion this year, it's astronomical. And even more impressive, they went from a $107 million loss in 2019 to a $7 million profit in 2020. You never see a tech company 4.5x its revenue and go hypergrowth and then go become profitable. But it makes sense because they say that 80% of their users are organic or referred. Yeah. And I believe it because their marketing spend only went up 48% between 2019 and 2020. Wow. Yet revenue went up 450%. So it's a product.
Reddit was its marketing in a way until it turned the other way at the end of Q1. And we don't necessarily get a sense in this filing of what happens after Q1, which I think is going to be important. I think also we don't have a sense of the costs that are going to come with the increased scrutiny that has come to Robinhood because, frankly, its systems were not ready for what it encountered. So we see the upside, we see the profit that came from that surge, but we don't see the costs that are going to come in as a necessity of coping with it, right?
Yep, risk. I mean, there's a ton of risk. And there's actually 75 pages of risk in the S1. It was pretty hard to read through, but they list everything out. And clearly, regulatory risk, technical outage risk, customer backlash risk, all of these things exist. And I do think there's going to be tremendous attention paid and oversight around payment for order flow, especially pushing people towards riskier products. Now, in the FINRA settlement of $70 million just from last week, a couple of things that they brought up were automated approval systems were approving red flagged customers towards options tradings, meaning like people who even say I want low risk tolerance would still be approved for options. There's misleading communication around how options and margin trading works. And all of these things mean that as you push people towards riskier trading where they're more opaque, the spreads are wider, meaning it's a much more lucrative business. Clearly, the SEC is going to be keeping an eye on this kind of thing. And I do think, again, it's a huge risk. But if it does not pan out, a few months ago, we all thought this company might go under, and suddenly they're coming back and they're potentially having a $40 billion IPO. I mean, maybe they could turn it around in that regard.
I'm so curious about this payment for order flow risk in particular. I mean, it's so important to note that over 80% of this company's revenue comes from payment from order flow. And then you have over 30% of that revenue coming from Citadel, or over a third of that revenue is coming from Citadel in particular. This is a company that does not have diversified revenue streams, let alone diversity within that payment for order flow bucket. Do you think that's going to be problematic just from a growth standpoint?
Yeah, well, I think less from a growth standpoint and more from an operational standpoint. So payment for order flow, I mean, core of their business, they take their customer orders, pass them to market makers like Citadel Securities and Virtu Financial, and then they improve the price, pass that back to Robinhood, and they keep that as revenue. Citadel, as you said, 34% of their overall transaction revenue lies with this one market maker. If they change, and Robinhood lists this clearly in their risks, if they change their terms, if they stop dealing with them, which during any kind of market volatility, maybe they could, that does represent a big risk. But even beyond that, I mean, again, 34% was an interesting number because that was also the amount of their transaction revenue in crypto that Dogecoin represented. And going back to these kind of concentrated risks that Q1 were spectacular in terms of their revenue, Crypto revenue went from 4% to 17% of overall revenue between Q4 2020 and Q1 2021. Right. Of that, 34% was Dogecoin. And whenever I'm on Tech Check, it always comes back to Dogecoin. And this is the first mention I've actually ever seen in an S1 of Dogecoin. But what is Q2 going to look like? I do think will be very interesting, especially with any amended filings before an IPO. We will get to see how did these numbers play out in Q2.